to Bell Direct's market update. If you're joining us by live stream on YouTube, thank you so much for your company. So let's just get started and give you a share market update. Well, the Aussie share market is having a pretty volatile Friday, but if you sift through the noise over the week, they're still holding on to a gain of over 5%, and that's our best weekly gain in over a year. The Aussie share market did start higher by about 1% today, really on the back of a couple of things. Stocks rallied in the US, rising about 2% after the US President Donald Trump took to Twitter saying that Russia and Saudi Arabia would cut production. And that saw the oil price pop 24% higher to $24 overnight, its biggest gain ever in history. And that saw energy stocks on Wall Street lift about 9%. Meantime, also overnight, we also saw gold retreat and bond yields fall as investors felt a bit more courageous and put more money onto the equity table. But throughout our trading day, as we went on, we looked to the US futures, which turned negative, indicating a negative start to their Friday session this evening, which is why currently our Aussie share market is down about 2%. On the ASX, though, there still are plenty pockets of green. The energy sector continues to shine, rising the most. Even though the oil price is still in bear territory, it has had a significant gain over the last couple of days. Oil Search, OSH, is another standout in the energy sector. It's up about 6%, or it was about 6% higher earlier, and over the week an exceptional gain of about 19%. While the consumer discretionary stocks or sector really continues to drag on the market today. The likes of corporate travel management, that company CTD, down about 9%. And if you look at the leaderboard, it's been a bit of a seesaw day. The mining contracting firm NWH is their ticker. They continue to rise throughout the day. They're holding about 10% higher, sitting at $1.50. Webjet was 5% higher earlier, but they're now about 1.3% lower. Of course, they yesterday announced that they raised $231 million on the institutional market, raising capital at $1.70, and currently they're trading at about $2.75. A standout today is Fortescue Metals, Australia's largest iron ore producer and exporter, another one to watch. It's up about 10%, or that's what it was doing a little bit early before we recorded this, and it's trading at about $10.70. And this is a company to watch. It's got one of the best dividend cover rates available on the market. And when I say dividend cover, that's the amount of money that it's got in its surplus cash flows and profits to continue to pay the dividends. And remembering that this company is expected to pay a dividend yield as high as 15% this year. Some say expect an 18% dividend yield. And according to Trading Central, their tool is available on our website. Trading Central provide quantitative analysis, and their charting terminology and mechanism is suggesting that Fortescue Metals FMG is likely to move higher into bullish territory, exploring new ground. And it makes sense given that that dividend yield is tipped to be so strong and largely outperforming the market. In terms of upgrades, Webjet was raised to an outperform by Credit Suisse. The cloud computing company NEXTDC, which has been doing exceptionally well of late on the ASX leaderboard, that was upgraded to RBC with a $10 price target. It was trading about $9.50 earlier. And today, Wilson's revealed some of their key stock picks in terms of long-term growth, looking at those key businesses with sustainable and repeatable cash flows and long-term strong outlooks. They like ResMed, Transurban, Xero, Amcor, the packaging company, heavyweight mining companies, BHP and Rio. They also like the gaming manufacturing company called Aristocrat, JB Hi-Fi, Wesfarmers, Woolies, Magellan, Macquarie, CBA and Goodman. And on the economic horizon, plenty to go through. Australia's retail sales come out today, rising more than expected in February. A bit of good news, but remembering the real key one to watch in terms of sales will be this month's figures. So they come out next month, and they'll be the ones to watch, of course, because most of Australia is in lockdown. While also this week we learnt that our manufacturing sector is now out of contractionary phase. But today we learnt that our construction industry has fallen deeper into negative territory. It's now back to where it was in 2013 in terms of construction data. And those figures, or that latest read, was out from AI Group, and their data showed that the construction industry actually fell about 5 points to a reading of 37.9. And what that means is it's under the key 50 benchmark level that separates expansion and contractionary phase. So as we can see, it's now fallen further below the 50 level, so it's deeper into the red. Another key economic read that we had was in the US overnight. We saw the US unemployment claims double in just a week at quite an alarming rate, hitting a brand new record high of 6.6 million people filing for unemployment benefits in the US. So I guess this is what traders will be looking to absorb this evening when trading resumes in Sydney time at about 11:30. Thank you so much for your company. My name is Jessica Amir. Thanks for your company this week and for tuning into all of our daily and our monthly and our weekly update. Do take care, stay safe, happy trading, and we'll see you next week. Bye for now. Any questions, comments, or feedback, please reach out. Take care.